Welcome to Balance of Economy. Before we dive into the data, please note that this is market research for educational and informational purposes only and does not constitute financial advice or a recommendation to buy or sell any asset. Let's look at the numbers.
All right, let's get right into it because there is one massive question on everyone's mind right now. After a truly historic, meteoric rise, the AI sector has suddenly hit a brick wall. So what are we really looking at here? Is this it? Is the AI bubble finally officially bursting, or is there something else going on under the surface?
I mean, you can feel the tension in the market, right? And the data? Well, the data's screaming it. The fear and greed index has absolutely cratered, down to 13. That's not just fear. That is deep in extreme fear territory. And you know what happens when sentiment gets this ugly? Investors just run for the exits. They sell first, ask questions later, and that can create a huge gap between a stock's price and its actual underlying value.
So let's start with Section 1. The market hits a wall. And that's not an exaggeration. For what felt like an eternity, AI stocks were on this unstoppable, just parabolic run. But now, all of a sudden, they are in a nosedive, a really severe downturn. And that kind of whiplash has everyone, understandably, questioning the stability of the entire sector. But here's the thing. This isn't happening in a vacuum. Which brings us to Section 2, what I'm calling the cocktail of fear. We really need to unpack these powerful global macroeconomic headwinds that are forcing investors everywhere to pull back on risk. They're ditching high-growth stocks and running towards things they see as safer. And it really boils down to two major drivers that are spooking everyone right now. First, we have an energy supply shock. The Strait of Hormuz has been closed, and that has brought fears of inflation roaring back to life. Second, there is a ton of uncertainty swirling around a big leadership change at the Federal Reserve. You put those two things together, and you have a perfect storm of anxiety, causing big money to dump anything they see as risky, and that definitely includes those high-flying AI stocks. Okay, and this is a huge but, this is where the story takes a fascinating turn. Let's move to Section 3, the fundamentals. Because while the market is in a full-blown panic, the actual companies are telling a completely different story. We're going to contrast that emotional, fear-driven reaction with the cold, hard revenue data. Now, this right here, says it all. The disconnect is just staggering. On one side, you have the market sentiment, panic, indiscriminate selling, this idea that we've hit a wall. But then you look at the business reality. Microsoft's revenue, it's up 17% year over year. Google Cloud, it's exploding with 48% growth. And AMD's super important data center business, up 39%. These businesses aren't hitting a wall. They're still accelerating. And this goes way beyond just the top-line numbers. The demand is actually getting deeper. Google Cloud is sitting on a backlog of $240 billion. Think about that. That's future revenue that's already locked in. AMD just spun off a record $2.1 billion in free cash flow in a single quarter. And even with all the talk of AI threats, Microsoft's core search business still grew 17%. The fundamental picture is just incredibly strong. So let's keep pulling on this thread in Section 4, because the AI story is so much bigger than just chips and software. What we're seeing now is this massive, broad-based demand rippling across the entire supply chain, what you could call the hidden AI ecosystem. And this quote from Morgan Stanley's Eric Woodring just nails it. You know, during a gold rush, the people who make the real money are the ones selling the picks and shovels. Well, Woodring is saying that all this AI data has to be stored somewhere, and hard disk drives, HDDs, are the picks and shovels of this AI gold rush. Demand for them is just off the charts. And here's the kicker. The HDD market is basically a duopoly. Just two companies, Seagate and Western Digital, control 90% of the entire global market. 90%. So when you have demand that's surging like this and no new players coming in, these guys have unbelievable pricing power. It's a textbook supply and demand squeeze. This infrastructure build-out is now going beyond just storage to something even more fundamental, something you can't fake. Pure, raw power. These AI data centers are unbelievably energy hungry, and that's creating massive opportunities in some really unexpected places. I mean, just look at Ford Motor Company. After taking a massive $19.5 billion write-down on their big EV bet, they are making a wild pivot.
They're sinking $2 billion into repurposing an old EV plant to start building giant battery energy storage systems, basically huge power packs, specifically for AI data centers. A 100-year-old car company is retooling its business to power the AI revolution. If that doesn't show you how deep this industrial shift is, I don't know what does.
All right, so all of this brings us to our final section, the verdict. After wading through all the macroeconomic fear and looking at the hard fundamental data, what is the actual signal in all of this noise?
So, what does it all mean? Well, the evidence overwhelmingly points to one conclusion. We are not seeing a fundamental collapse of the AI thesis. Not at all. What this looks like is a classic, severe, technical correction that's being fueled by those macro headwinds we talked about. The market is having a panic attack, and investors are selling everything, including really high-quality, fast-growing companies. But the underlying growth story for AI hasn't changed one bit. That's the data for today. Now, I want to hear from you. Are we looking at a temporary shakeout in AI or a fundamental structural break? Drop your bull or bear case in the comments below. Don't forget to subscribe to Balance of Economy for high-density market insights. Stay sharp and stay informed.